Hello and welcome. You're watching Business Plus. I'm Shweta Kothari. We're bringing you stories from the world of business policy and economy. Suyash Maheshwari here with me in the studio. Suyash, good afternoon.
Good afternoon, Shweta.
Let's take a quick check of the markets. Markets ending in red this afternoon.
Yes, Shweta, you're absolutely right. Markets came under a fair bit of pressure throughout the session. Actually, we saw, in Nifty and Sensex both extending their losses. Now, Indian markets have, after today's correction, extended its losing run to about 2 sessions now. The last tick for Nifty coming in at 18,989 mark. So we have broken below that 19,000 mark, which was seen as a crucial support zone for the markets, going forward. Now, Nifty opened about 35 points shy of that 19,100 sort of a zone. And, in the morning trade, we saw Nifty move briefly in the green, but it touched an intraday high of 19,096. So clearly at 19,100, there seems to be a good bit of resistance playing out. So going forward, I think 19,100 will be a crucial level to track as far as resistance is concerned. After that initial bounce, as I mentioned, both Nifty and Sensex continued to decline for the remainder of the session, and the close also came just about 15 to 16 points shy of that day's low. So the markets ended near the day's low pretty much. As you can see on your screen, Nifty at end was down about 0.47%, closing in at 18,989 mark. Sensex, on the other hand, lost about 280 points or so and closed below that 63,600 sort of levels. Now, mid cap and the small caps, the broader markets in general were trading in the green this morning. However, we saw some correction setting in the last hour of trade in both mid caps and small caps. Nifty mid cap 100 was down 0.26% at 38,775, and the Nifty small cap 100 was down almost, it was flattish, down about 0.07% at 12,640 sort of levels. Volatility also spiked by about 2%, and India VIX closed above the 12 mark. Now, one point I want to highlight, about the headliners, especially Nifty. In the bounce back that we saw play out in the Friday and the Monday session, Nifty surged about 400 odd points or so. But the correction that we have seen in the last couple of days, it has pretty much wiped out 250 points of that 400 point bounce. So it looks like that the bounce that we saw on Monday and Friday was a dead cat sort of a bounce, which indicates that the primary trend going forward will remain bearish.
All right, primary trend expected to remain bearish. That is what our analysis, our expectations are. Rohit Srivastava, founder, Strike Money Analytics and India Charts, joining us on the show. Rohit, good afternoon. Thank you for taking time out. What are your expectations for a near-term support level for Nifty?
So we have made some kind of a very short-term low at the recent bottom. So we are closely watching whether 19,838 can hold for a period of time, and by a period of time I mean maybe a couple of days, a week at the most. Because we are heading into this event for the US, the Federal Reserve FOMC meeting tonight, after what has been a continued 3-month decline for the US indices. So they are getting slightly oversold. You have a setup where you can get some kind of a pullback retracement in the very, very short term. And if the event only ends up being exactly what everybody is expecting, so it then, it becomes very discounted. That means that the FOMC doesn't really raise rates, leaves one possible hike on the table for the future, which is exactly what they did the last time. And that's sort of what the market is expecting. So if it plays out as expected, the short-term impact ends up being one of, cover of news, essentially for those who've been shorting these markets or been selling these markets, and you do get a near-term pullback. So we do start with the possibility that if the Nifty itself here ends up holding the current levels, which is, sort of, today's low is around a 61% retracement of the last 2-3 days bounce. We can attempt to move higher even towards 19,450 in the very, very short term, which is in a 1-week kind of time horizon. However, I do believe at this moment that any such bounce would only be retracement of the ongoing decline. Sorry.
Okay.
And possibly we will see more selling in the future.
All right, since we are on FOMC, the expectations could be met or could not be met? What are the expectations? So let's quickly begin with two case scenarios. A, there is a rate hike. In case of a rate hike, how are you expecting markets to move? And B, there is no rate hike, that further pushes the idea for a rate hike to the next FOMC. In both case scenarios, how are you expecting markets to react?
So the only scenario in which markets could be relatively more bullish is one where he actually changes course, or suddenly turns dovish, that no, we can't really keep rates this high because we need to support the US bond market. There's a lot of treasury issuance really coming up in the months ahead. If that is the stance, then it would be a very, very changed scenario, because the markets would start reflating based on the potential that they're going to buy bonds, or even resume QE or something like that. Now, those things, that is the least expected course of action. The expected course of action is somewhere on the lines of what you've just asked. One is doing nothing, but still leaving the potential for a rate hike in future, which, while short term, like I said, it can be a discounted event, but in the medium term, it still keeps the market very, very tight on the liquidity front. And that is something the markets are not going to like eventually, because if you even keep rates at the current level, say for another 2 quarters, you are going to end up in a slowing US economy. It's already starting to happen. There are different parts of the world that have already slowed down, from Europe to China, and that's not really helping. So scenario number one just slows down the slide, but eventually we are going to head lower because of the potential of a economic slowdown. The other scenario is you actually end up hiking rates. That is again a least expected path, because inflation data has been cooling, even though it has stalled right now. It's not exactly started to shoot up, so they don't have enough reasons to tighten too much, which is why again that's not the expected path. But if they do raise rates, that would really hurt markets and lead to a more immediate sell-off across the board. So that's, I think those are the scenarios that I can build upon.
Now, Mr. Srivastava, Suyash here. Good afternoon, sir. I mean, I was just listening to what you were saying. Seems like, Fed is in a catch-22 sort of a situation. Can't cut rates because, inflation is running too hot. Can't raise them because bond yields are already at a 16-year high. I mean, what's the escape? What's the simplest path, or the path of least resistance for Fed going forward?
So the path of least resistance is essentially the one that the market is anticipating, that they do nothing right now. They let the market figure it out. And the market is going to figure that out in its own very, very tough way, which means that you may not necessarily see immediate action. Okay, so you can say, okay, fine, we leave rates where they are. But like I mentioned, if rates remain where they are for even another quarter, you will end up in an economic slowdown. And can that economic slowdown, so slowdown is a mild word, can it really become a recession? And that takes us to the other major indicator, which is the yield curve, right? The yield curve has been inverted now for more than a year. And history shows that it can be 6 to 12 months ahead of a potential recession. But recessionary conditions only start showing up after the inverted yield curve actually starts steepening. And that is something that we have been witnessing for the last month and a half, that the yield curve, which had almost inverted between the 2s and 10s, inverted to around 110, 115 basis points, is now down to only 20 basis points to 15 basis points. So that's a huge reduction in the inversion, which has happened. And that's the first early sign that we are now closer and closer to the point where the economic slowdown can result in an economic recession. And that is why stock markets have started to react to that potential in the coming future. So that's, I think, the more important indicator than really what the Fed does, because if the Fed simply leaves rates here, they try to just play it safe. Okay, fine, we won't do anything. Okay. But these high rates will slow the economy down anyway.
Mm-hmm. So US Fed caught between a rock and a hard place. No easy way out, no easy situation out there for US Feds at this point in time. But shifting focus to and coming back to India, let's take a look at some of the sectors that you're tracking.
Yes, Shweta. So first, let's talk about Nifty Bank. Today was the options expiry for Nifty Bank. Nifty Bank corrected by about 0.34% in today's trade, and sits at around 42,700 levels. Now, I was talking to a technical expert joining us who joined us this morning, Akshay Bhagwat. He was of the opinion that the index has formed a double top sort of a pattern, which and it has pretty much identified that pattern. And if it corrects from here on, it could, we could see a correction of about 1,000 to 1,500 points on Nifty Bank. As you can see on your screen, Nifty Bank also, is below that 43,000 levels. So maybe we should brace for that sort of a correction. At least that's what the word coming in from, analysts is. Nifty IT was also under a fair bit of pressure, corrected by about 0.8%. Now, this is of course because, Federal Reserve policy, very much affects the IT pack on the whole. Another sector which was trading in, deep in the red was the Nifty Metal pack, down about 1.43% or so in today's session. The media pack, on the contrary, was the among the gainers. It rose about 0.88% in today's trade. Pharma pack also saw a bounce back. It was up about 0.35%, and the PSU banking space was up about 0.32%.
All right, that is as far as sectoral performance is concerned. Nifty Metal there down by about 1.43%. What's happening here, Suyash?
I think it's a fact that the PMI data coming from China yesterday showed that there was a contraction in manufacturing activity. So the demand going forward is expected to remain muted. I think that is what's playing out in the metal pack, because if you
let's ask Rohit if that is what is playing out with the metals pack. Rohit?
Well, that is one of the angles. The slowing Chinese economy has definitely played a role in slowing down demand for commodities. But simultaneously, like I said earlier, there is also a slowdown in Europe. There is a general slowdown everywhere, and it is driving up also the dollar. When it comes to commodity prices, the dollar itself, is sort of inversely correlated with the entire commodity complex. So when you get a strong dollar, you usually find that commodity prices are falling, and that's sort of been the pattern over the last 4 to 5 months. So what that's really meaning is that it continues to put pressure on commodity prices. Apart from the demand environment, which is weakening, you don't have a dollar environment which is really weak either. So both of those combined are putting downward pressure on commodity prices, which are not able to pick up, and subsequently leading to selling in the cyclical commodities space.
Okay. And Nifty Realty up about 1.55%, outperforming all the other sectors. What's happening up? Is the pack overheated here? We've seen wonderful returns weeks on weeks.
Yeah, so I think it's the general concern about markets that is impacting many of the other sectors, because typically we've seen a lot of rotation over the last not just this year, but I think most of the post 2020 rally has been one of rotation, where every sector has participated from time to time. But what is happening now, as people start fearing this entire story that we've been discussing, from the US slowdown to its impact on Indian markets, is that if you do get a major cut in global equities, and if it does impact India, then it sort of impacts everything. And so every sector starts to underperform in that sense. And that is why you're probably seeing these cuts almost across the board. If you look at 1 month returns, every index is negative. I think there's probably only one index that might end up showing some kind of a positive number. But every other index, I think, is right now showing a negative number on a 1 month basis. Yeah, and reality is that one index that is
absolutely
is a 1 month.
No, exactly. Realty is standing out there. Multi-decade high, exceptional performance from Nifty Realty. But we're going to move on now to an important story that we're tracking coming by the way of earnings season. Sun Pharma came out with its Q2 numbers, surprising streets, Suyash.
Yes, Shweta, the numbers largely are ahead from what the street was expecting. On the profitability front and the revenue front, Sun Pharma has exceeded what the market's expectation was overall. However, margins were slightly softer than expectations. Now, as you can see on your screen, net profit for the quarter was up 5%. This is on a year-on-year basis, coming in at 2,375 crore or so. This was also ahead of what the street was penciling in. Street was actually expecting profit to decline on a year-on-year basis. Now revenue surged by about 11% compared to a year ago, coming in at 12,192 crore. This was about 1.5% ahead of what the street was expecting. EBITDA, which is earnings before interest, depreciation, earnings before interest, tax, depreciation and amortization, stood at about 3,179 crores, up 7.5% from the year ago period, and it was also about 1% higher than what the street was expecting. Margins, on the other hand, as I pointed out, declined by about 90 basis points or so, coming in at 26.1% and about 10 basis points softer than what the expectations were. The street was expecting a figure of about 26.2%, so 10% softer than the expectations. I was also looking at the stock, Shweta. Before I get to the stock, actually, there are some figures coming out just now. India formulation business overall on a year-on-year basis was up about 11.1% or so. The US sales, on the contrary, declined by about 8% on a quarter-on-quarter basis, but on a year-on-year basis, they were up about 4%. Now, US sales do matter because they were expected to, take a be a spoilsport as far as the earnings for Sun Pharma go. They were expected to keep that revenue growth under pressure, but overall the numbers are looking good. And talking about the stock was among the top gainers today. In fact, it was a top gainer in the Nifty pack, surging about 2.5% or so. Now today's price action marks a significant departure from the bearish trend that we have been seeing playing out in Sun Pharma over the last 15-16 days or so. On the whole, although Sun Pharma has underperformed Nifty Pharma, I was also looking at multiple time charts. Sun Pharma on a 1 month basis is down about 4%. Nifty Pharma, on the other hand, is down about 3.2 to 3.4%. On a 6 month basis, Sun Pharma is up about 15%. Nifty Pharma, on the other hand, is up about 18%. On a 1 year basis, Sun Pharma has given returns of about 7.5%, whereas Nifty Pharma has surged about 9%.
All right, that is of course the stock performance for Sun Pharma, but what are you making of the numbers, Rohit? Beating street expectations, although margins still substantially down by approximately 7.5%.
Well, not really very glued to Sun Pharma right now.
Okay.
But the only thing I just noticed while you were talking is that it's managed to go back to the 2015 highs of that it had made close to 1200. And it's almost back at that number. So yeah, that's sort of what it has done over the last 2 to 3 years.
All right, a good bounce back as far as Sun Pharma is concerned, but let's move on to top gainers and losers. Sun Pharma, of course, outshined in the Nifty index. Which were the other gainers and losers? Suyash, run us through them.
Yes, Shweta. So among gainers, apart from Sun Pharma, which was the top gainer, was BPCL. BPCL was up about 2.2%. In fact, it has extended its winning run to 3 sessions now. Hindalco was another gainer. In fact, the only gainer in the Nifty metals pack, which was trading under significant bit of pressure. It was up about 0.54%. ITC also surged about 0.5% or so. Bajaj Auto was another gainer on the back of good auto sales data coming in for the company for the month of October. Now, among losers was Adani Enterprises. The stock has been under a fair bit of pressure. We have seen a good bit of decline playing out in Adani Enterprises. In today's session, Adani Enterprises corrected by almost 3.4 to 3.5% or so. SBI Life, Coal India was another top loser. It was down about 2.3 odd percent or so. Tata Steel corrected by about 2%. SBI Life was down about 2.13%, and Adani Ports also, another stock from that Adani stable, down about 2% or so. Now, sir, BPCL has been, doing pretty well off late. The stock has been on a bit of a run up. I think on Monday it was up about 3%. Yesterday also we saw a good bit of a bounce back, and it was in fact among the top gainers also yesterday. Today also we have seen BPCL feature in that list. What's driving the stock, sir?
No, I can't really make stock specific comments. I'm sorry.
All right.
All right, Rohit, thank you very much, sir. Lovely having you on the show. Thank you for taking time out for speaking with us here at News9. Shifting focus now to a story we are tracking by the way of PMI numbers. The PMI data has come through. India's manufacturing PMI sank to an 8-month low of 55.5 in October. Cost pressure and muted demand for certain products drove India's manufacturing activity to an 8-month low in October as against the Global Purchasing Managers Index of 57.5 a month ago. According to latest PMI report, growth eased in October due to a competitive pressure and weak demand in some plants. Though there was further increase in new orders, the rate of expansion was the softest in a year, with consumer goods especially being impacted. PMI data there at 8-month low. Teresa John, lead economist Nirmal joining us here on the show. Teresa, thank you very much for taking time out. Explain to us what's happening here. PMI at 8-month low, is it a thing to worry? It's still above the 50 mark.
Yeah, so overall, if you see, manufacturing has held up quite well over the past few months. If you're looking at both the PMI data as well as the IIP data. But incrementally, I think you are seeing some signs of slowdown. So it's not like we're in contraction mode. So we're still well above 50, and from 57.5, we've come down to 55.5. But I think new orders, exports, we are seeing some signs of a slowdown. So that's in line with even the GDP projections that we have, and even the RBI has. So growth is expected to slow from around 7.8% in the first quarter to maybe around 6.5% plus, and then in the third and fourth quarter you will see some more of slowdown. So that is broadly in line with expectations.
All right, broadly in line with the expectation. Anybody who's tracking manufacturing and the sector specifically would say that this was the time where we were expecting some sort of a rebound. That hasn't really happened, Teresa.
So the festive sales have been good, so that will provide some support to growth, particularly in the third quarter. But otherwise, see, global demand is coming off, so, and we've seen that exports have been sluggish, for most part of the first half of FY24. And in September, we've seen a situation where the export slowdown has moderated, but we're still seeing a decline in exports. So globally, there are some signs of slowdown. I think India is not completely immune to that global slowdown, and that's what we are actually seeing.
I mean, we are seeing I think PMI has fallen to a 8-month low, and to Teresa's points, it is because of that lack of demand, from global markets as well as domestic markets as well. But I mean, if we look at the broader picture, Shweta, we have been in that expansion phase. Just to clarify, a reading above 50 indicates that the manufacturing activity is expanding. A figure below 50 indicates that it's contracting. We have been in an expansionary phase for the last 25-26 months or so, and the current, I think, slowdown that we are seeing, as Teresa also pointed out, it is because of the global demand picture that has recently receded in the last few months or so. All right,
Teresa, do you expect or perhaps see a pickup in global demand anytime soon, given what's coming out of China? The numbers don't look very promising, very good. US currently hovering, battling recession at the moment. Do you see demand pick up anytime soon? But that's the commentary that is coming from the government, that the demand will pick up, exports will in fact pick up in a month or two from now. Is that your projection too?
I mean, I don't think that at least in the next 1 to 2 months, a pickup seems unlikely, at least in my view, because I mean, the US is not yet in recession. We've had very strong GDP growth coming from the US. Even China growth was above expectations, for the third quarter of 2023. It's and given the way the rates have moved up, and the US moratorium on many loans has actually ended in October, probably global demand will continue to remain sluggish even going into 2024. So I don't see a very significant pickup in near-term demand coming from the developed markets.
All right, no significant pickup in demand. what sort of outlook do you have on PMI before we move to, GST collections data, because that's also coming for the month of October, just about an hour back from now? Do you see PMI picking up? What is your expectation?
Given that we are moving into the festive month, so to say.
Festive month, the festive cheers have been reported by a lot of consumption-driven markets, especially auto sales have done really well.
The housing sector.
The housing sector is doing exceptionally well. What sort of changes are you expecting in the next quarter, given that India is moving into festive season?
So I don't think the PMI numbers will fall below 50, but I don't expect it to improve from here. So if you see the production for the festive season happens, 1 to 2 months before. So we're actually seeing, the companies were anticipating higher demand during the festive season. I think production has adjusted for that in the past couple of months, even if you look at the auto production numbers. So the festive sales will be good, and that's what you're hearing. But I don't think the production numbers are going to pick up from here, because now it will largely be the post-festive demand that is going to drive production, and that we think could see some slowdown, particularly in the export phasing sectors.
All right, Teresa, stay with us. GST collection data, as I mentioned, is also out for the month of October, rose 13% to 1.72 lakh crore, second highest ever in the history of GST. Average gross monthly GST collection in FY24 now stands at 1.66 lakh crore, 11% higher year on year. GST collection, Teresa, in line with the expectations?
No, the GST numbers, I would say there's been a bit of a surprise here, because September, if you look at a lot of the high frequency indicators, there was some signs of sluggishness if you look at the traffic indicators, etc. So in that context, the GST numbers, so it's the collections in October, but for the month of September essentially. So it has done I think quite well. And even if you look at the average GST, the growth rate has been around 9 to 10%. So it's actually still double-digit growth rate. So the GST collections are holding up well. To some extent, this reflects improving compliance as well, not just higher demand, but it's indicative of a relatively strong and resilient economy overall.
All right. So if you look at the two data points combined, lower PMI, higher GST collection, what are we making of these, relatively contrasting data? On one hand, you see, more demand when it comes to GST collections going up, manufacturing relatively low. How are you, relating the two? How is an average person likely to draw a parallels between the two?
Yeah, so I think these are, in a way, two isolated data points. You have to see it in the entire context of things. But if you look at both the data, so PMI numbers holding up about 50. As you all mentioned, over the past 26 months, we've been holding up in the expansion zone. So overall, it suggests that the economic activity, particularly in the context of global growth being relatively sluggish. India remains island of growth to some extent, but incrementally, I think you would see, some signs of slowdown going probably post the festive season, in line with what we are seeing globally in India as well.
All right. And, lots of commentary coming in as well from the RBI governor this morning and as of yesterday, talking about how broader economic parameters and the early indicators that are coming in look very positive for the quarter gone by. Obviously, GDP expected for Q2 is expected to grow at about 6.5%. But from the commentary that RBI governor has made, it appears that it could be well over 6.5%.
Yeah, it could be marginally above 6.5%. So as I said, the manufacturing, not just the PMI numbers, the IIP numbers for the quarter as a whole has done quite well. And we've also seen a situation, even if you see the results from the companies, revenue growth has been relatively sluggish, but you've seen margin expansion and EBITDA growth because of decline in commodity prices. So if you look at what goes into the GDP, it's both the IIP numbers and the EBITDA numbers of the corporate sector. So you could see some support for the manufacturing sector overall coming in from there. Agriculture, I think it will probably be in the 3.5% range, because the Kharif crop has not been too bad, but it's not a great year as well because of the spatial distribution, uneven spatial distribution of the monsoon. Even services sector, even the PMI numbers and some of the traffic indicators for the quarter as a whole, credit growth, all of those indicators have held up quite well. So it could be, slightly above 6.5% in the second quarter of FY24.
All right, and before I let you go, what are your expectations as far as Q2 GDP is concerned? 6.5% is the RBI's expectation. What are you expecting at Nirmal Bang?
So our base case is actually at 6.4, but once we do the final numbers, given the strength of the data, it could be we could revise it up slightly higher. Maybe it could be like 6.6, 6.7, but not very different from the RBI's base case.
Okay, not very different, not very far from RBI's expectation. And Teresa, just before I let you go, RBI governor also alluded to a lot of geopolitical activities that are beyond India's control and also hinted at financial institutions playing the long game. And he said specifically, and I quote, play like Rahul Dravid, play the long game. What are you making of the geopolitical tensions? Are they likely to have any long-term or short-term impact on India? So far, we have remained insulated.
So the main channel through which India is impacted by geopolitical tensions, I mean, as long as India is not a primary actor in any of those, is through the commodity channel and primarily coming through crude oil prices. So far, we've seen a situation that the geopolitical tensions have been contained. It's not spread to the other Middle Eastern countries as of now, and globally also the expectation is that it will remain contained. So, and because of that, we've seen crude oil prices correct, not just because of, so there's one is that global demand, there is some expectation that because of, lingering fears of recession, demand may not be as strong. And as from the supply side, as of now, the base case is that there will not be too much of disruption because of the geopolitical tensions. But if we see the tensions flare up, then you could have crude oil prices, move up again. So that remains a risk for India. But as long as crude oil remains contained, I think below $100 per barrel, the Indian macros are relatively insulated.
Okay, and at what point will crude oil prices worry you? At $100 and above, or 95 and 90 and above?
So at this point in time, I think even 90 we are able to sustain. The current account deficit will be a little stretched, maybe around 2.5% of GDP, or around those levels if it is around 95. But at above 100, I think would be the main cause of worry. Then you would possibly see the current account deficit expand about 3% of GDP. So then that would be the main. I think that would be the main point of worry.
Okay. It's not there yet, so I think something to rejoice, although crude prices and crude has been very volatile in the past weeks. Teresa John, thank you very much for taking time out. Lovely to have you on the show.
Thanks.
And moving on, auto sales numbers have come out, started pouring in for the month of October. There is definite boost in numbers on the back of festive demand. What are the numbers looking like? Let's get in Krishnakumar here in the studio. Krishna, good afternoon.
Yes.
Run us through the numbers.
As always, isn't it? On Business Plus here, Shweta, with you. We always keep people abreast with what's happening as far as car and bike sales in India are concerned. Let's begin with all the major players. We're talking about Maruti, M&M, Hyundai and Tata Motors. And if you take a look at the overall numbers, they're all in the green.
All in the green.
And
I'm looking at double-digit growth there.
Absolutely. Maruti Suzuki, India's largest car maker, India's largest auto company, 20.5% increase in overall domestic sales. This doesn't include exports. Just sales within India is concerned, it's up 21% to 1.77 lakh units. Bear in mind, this is just for the month of October. Nearly 1.8 lakh units sold for the month of October. What is down in Maruti is what is interesting. Mini and compact segment sales, we'll keep talking about this. The fall in demand for all these hatchbacks and mini compact cars showing up in Maruti. We have so many small Espresso, Alto, so many numbers. All of them are going down 3.5%. Mini and compact segment sales down. But where is it moving up? There you go, Shweta. Utility vehicle sales, look at that number. You're talking about double digit. That's nearly a triple digit number. 91% is the growth as far as this utility vehicles. What are utility vehicles? Your SUVs, compact SUV, big SUV, middle SUV, all SUVs up. People are buying them in huge numbers. Exports too up 7.5% as far as Maruti Suzuki is concerned. So great shot in the arm for Make in India continuing. Exports up, domestic sales up, SUV sales up, only mini and compact segment down. That's as far as Maruti Suzuki is concerned. If you take up the other auto players like Tata Motors and M&M, you will see the fact that that green trend is progressing. There you go. Tata Motors overall sales, that includes exports as well, up nearly 6% to 83,000 units to be, and all these numbers, bear in mind, are month-on-month numbers, comparisons as compared to September. When we're saying 6% up, domestic sales to up 6%, over 80,000 units being sold as far as Tata Motors is concerned. This is all the vehicles within the Tata Motors ambit, and this includes passenger vehicles. We're talking about cars. They're selling car sales from Tata Motors, because Tata Motors sells all kinds of vehicles. Car sales is up 7% to above 48,000 units. They've sold 48,000 units and more in just the month of October. Bear in mind, all of these are month-on-month numbers comparison. It's up 7% as compared to the month of September. That's what we're talking about. And as Shweta rightly pointed out, all of these numbers are because this is October, the peak festive demand season. That's the reason why you're witnessing all of these numbers go up. M&M, 32%, again, like Shweta talking about, double-digit growth in sales, 80,600 units total sales. Bear in mind all that M&M sells, and M&M sells everything from passenger cars to tractors, bear in mind. So that's why this is total sales number, good for M&M. But as far as car sales, and specifically domestic car sales is concerned for M&M, all your favorite M&M cars, they sold 35% more than the month of September. And all the utility vehicles, there you go, 36% growth in M&M's utility vehicles. You're talking about your XUV 700 as well. Great sales for XUV 700. See a smile on Shweta's face for that car. We also have the only thing that's going down as far as M&M is concerned. That's the export figure. Export figure is down 33% over here. And also, it's not a big number. These numbers, the percentage is high. They exported around 2,700 vehicles in September. In October, it was down to 1,800 vehicles, probably because they're selling more in India and not exporting enough to people outside. So we won't take that number all that seriously. But look at this one, 18% growth in sales for Hyundai. Nearly 69,000 units sold in the month of October. People have been buying Hyundai cars, Tata cars, Maruti cars. Domestic sales up 15%. And the reason why we're classifying this separately, domestic sales, because Hyundai's India unit also exports as well. So there you go, exports too up 36%. Great shot in the arm. Hyundai, which came to India to make cars for India, is now exporting cars from its India unit. Great news, and that number keeps going up every single month, and it's gone up with a quantum leap because of that festive demand we're talking about. All of that is four-wheelers. Let's quickly shift focus to two-wheelers. Hero MotoCorp sales up 26%. So this is wheel agnostic. Car sales, four-wheeler sales are up. Two-wheeler sales too up 26% to 5.3 lakh bikes being sold by Hero Moto. All bikes of Hero Moto put together. Then we have MG Motors. We have a car sales in between. MG Motors up 17% to 5,100. Bear in mind, MG Motors is being on the anvil of being sold to Sajan Jindal. We will talk about that later. But as far as the two-wheeler sales are concerned, if you can pull up the Bajaj Auto pack numbers, Bajaj Auto up 19% to more than 4.7 lakh, 4,70,000 bikes being sold by Bajaj Auto for the month of October. So, Shweta, look at that. Domestic sales up 35% for Bajaj Auto. Overall sales up in the double-digit mark as well. So, Bajaj Auto having a fantastic October, because when you talk festive demand, Shweta, we always talk about car sales. Fact of the matter is that India is such a big two-wheeler market that festive sales, or auto festive sales, also means huge number of two-wheelers. Look at that. 5 lakh two-wheelers roughly sold just for the month of October. Right. That's what tells you the demand that India has for two-wheelers as well. Shweta, back to you.
All right. You know, Krishna, talking about these numbers look very fancy, but what picture do they tell you? If I were to ask you, all of them double-digit growth, which of them stand out? Is it two-wheeler, four-wheeler, three-wheeler market? Which of them expanded the most?
Right. All I can say is that all the numbers, that's why we call it car and bike sales zoom, because they're all up. I cannot pick a secular trend over here, right, because we're all talking about the month of October. It's the month when Indians do high ticket spending. It's pent-up demand also showing up in the month of October. Everybody waiting for that auspicious month of October to finally go ahead with their car purchase, to finally go ahead with their two-wheeler bike purchase. So if you ask me, all these numbers point to only one trend, and that's that festive mood has propped up sales more than it would, but that happens every year. I would not even be surprised if the numbers stay up for the month of November as well when we discuss this on the 1st of December. So the only secular trend I can pick out is that the festive demand is up and running, which is a good sign. People have not shied away from festive demand. So there is no ugly surprise as far as festive demand is concerned. Festive demand is 2 thumbs up, double-digit growth. That's the only trend I can pick up. Apart from the fact that these numbers might have missed the estimates of some analysts out there. And I'm only saying that because you saw the auto pack, all auto stocks correcting in the day's trade today, which is a bit of an oxymoron considering the kind of sales numbers that they've put up. So, so assuming that that's a market factor and the fact that auto stocks have already run up, I would keep that aside and generally talk about sales numbers. I would just say it's auto companies cashing in on festive demand.
Auto companies cashing in on festive demand, and as you rightly pointed out, the expectation for the month of November is higher again.
Yes.
And that is on the back of Diwali. The festive season is not ending any time before December.
Absolutely agree with Shweta, and spot on, because this time we have a late Diwali. We have a late Diwali coming in November. You know, you can have a Diwali in late October as well, but this is one of those years when we have a late Diwali, which means you can have this staggered festive demand across October and November.
Right.
I am fairly sure the expectations on November monthly sales is going to be extremely high. And my only question is, can it beat these numbers?
Okay.
Can it beat the October numbers?
A very high baseline there for these numbers. You know, but the one trend, I know you can't pick between segments, but one trend that for me stood out specifically and has been reinstated again and again is that people are buying more SUVs. They're not buying mini vehicles, they're not buying compact vehicles anymore. They're aspirational, and if you are to buy a car, might as well buy an SUV.
Yeah, and they're very cognizant of the quality of roads that we have here. I think that they're more sure that, like, I want to have a car that deals with any kind of roads, kind of a thing. But whatever be the reason, it's over the last year, we've been discussing this, especially over the last year to 12 to 18 months, it's become very pronounced that the average Indian car buyer is not interested in a brittle small car anymore. Even if it is a small car that they want to buy a compact SUV or a mini SUV or a subcompact SUV, as these new categories have emerged. So SUVs, one thing I would like to add is that it's not one SUV that's selling. The entire spectrum of SUVs, from mini to a subcompact SUV to a full-blown SUV and MUVs. So
I mean, look at Maruti's number. For someone who's a late entrant into the SUV party, reporting a double-digit, over 20%
probably that's
growth.
why their base has been low, because other people have been killing it in the SUV segment. Maruti has not been killing it in the SUV segment. Thankfully, you have the Jimneys and cars that are doing really well these days, you know. So Maruti is sort of playing catch-up.
91% growth in the SUV segment.
Incredible numbers.
But
the overall number, if you take a look at it, the overall number for SUVs, is not that great. It's not like the highest number of, but for Maruti, the one fact of the matter is that it's posted its highest ever sales as far as SUVs are concerned for the month of October. So you really did pick out a really good trend in that sense, that like Maruti has been a standout performer as far as SUV sales are concerned. And that's again because what you explained, they have been a laggard. They're finally catching up.
Maruti there finally catching up. In fact, numbers there speaking a story and weaving a story of India's growth, consumption, aspirations to buy a better, more sturdier and a bigger vehicle to apply on Indian roads. We continue to bring you all these auto numbers here on News9. But with that, we've run out of time. Thank you very much for watching. Delhi has the fastest growing metro network among G20 nations. From 6